I'm in Daytona Beach, Florida. We're in a hotel room. Been working hard on a couple of deals down here, and yeah, I've been pushing myself lately. I've been trying to build a portfolio. I've been trying to go deep while there's opportunity in real estate. Real estate has just done this in Ontario. Just in general, real estate has been in just the shitter. Inflation's been running pretty wild. We were supposed to have inflation, transitory in 2022, and then it went through 2022 into 2023, and it continued on. And what we really need is deflation, but deflation would destroy everything. So today, FOMC meeting, the Fed, I shorted 3-1 this morning. I watched the Nasdaq go from October 26th to today. It has moved 17% in a month, a little over a month. And it's just uncalled for. This rally continues. We broke year-to-date highs. We're going in on all-time highs ever. Just flying. And I'm going to capitulate. It's, fuck it. I give up, So as soon as I do, I'm sure that the Nasdaq will crash. But I have been shorting it now for the better part of a year, almost a year and a half now. And I give up. I'm just gonna go back to what I know, which is real estate. I think I'm finally tired of trying to be right. And a lot of it comes down to revenge trading, to wanting to be right. I think that we'll probably have a huge pullback in January, February, March, April. One of those months we'll have inflation is not just going to move right down, right? There's going to be a bad month, there'll be a negative catalyst. I just can't hang on anymore for my mental psyche. Like, it's just one of those things where it's killing me to watch the FOMC meeting today. I put on a huge short and I'm like, our last down day was last Wednesday. So Thursday we went crazy rally, Friday crazy rally. We after market hours rallied, Saturday, Sunday into Monday rally again, Tuesday rally again. Wednesday I'm like, okay, how many days in a row can the market just go straight fucking up with no correction? In the most raging of bull markets, you have 2-3 days up, little correction, 2-3 days up, right? That's how it moves. It's just like fucking a rocket ship for the last 48 days in a row. In November, we had the strongest November in 50 years on the Nasdaq. So just fucked. Just fucked with my head. But yeah, I obviously can't execute on that. And I set a rule for myself that I wouldn't short, and then I did anyway. A lot of my feed has a lot of confirmation bias in it. I follow a lot of folks who, see a lot of the writing on the wall as far as pain for 2024, economic recession pain, a number of factors, floating in for, a good bear case. And there's a great bear case. That doesn't mean that the market can't be irrational longer than I can be solvent. And so, I thought I'd place a little bet on that, and I got roped in and continued to suck away my account value. So I've lost probably in the last year and a half, like definitely well over $1 million, right? And I got to learn something from this. Like I'm sitting here thinking, why the hell did I do this if I didn't learn something? Everything happens for a reason. So what's the learning lesson here? And like, what are the learning lessons is like, sometimes the market moves, and often the market moves in the way that you think it won't. So when everyone thinks the market's going to rally up and it's going to be a bull run, that's when it will reverse. It's like, it's the opposite of whatever anyone thinks. And so that's an interesting conclusion for me. It's just like, and I've come to this conclusion several times before, but I have an addictive personality when it comes to revenge trading. And I really just need to delete the app from my phone and defund all of my stock accounts and just focus on what I'm good at, which is real estate, right? When it comes to real estate, I have a competitive edge. I can actually deliver alpha. If market moves at 20%, I can make 30 or 40 consistently. And I can't do that in the stock market. Pretty much no one can do that in the stock market, but we all like to try, and I like to try too. And I'm not gonna blame anyone. I've got a lot of influences in my life that maybe I shouldn't, but okay. What else has happened? On the real estate side, the Fed still hasn't said yet that they're going to lower rates or how much. I mean, Their FOMC meeting today at 2 o'clock released the data plot, which says basically we're getting 0.75% in rate cuts for next year, which I think is probably going to be higher than 0.75 for the next year. It's, it is one of those things where all it would take is the U.S. economy to go into a recession, to have some bad jobs reports. But it's an election year, so I'm sure they'll fabricate. You got to remember that you look at the jobs report. Most of the current positivity we're seeing in the jobs report in construction and other public sector funded stuff is, again, funded by government stimulus. So Biden is pumping money into the economy, which should create inflation, and it is, but not enough. Not enough inflation, sadly, for the Fed to have to keep higher for longer. And they have kept higher for longer, really. But the market is forward-looking. And when you look at the data, what you find is that real estate should bottom sometime next year. That's a huge opportunity, so I'm excited about that. I also think that as rates fall into 2025, things will get juicy and euphoric. Historically looking, as rates kind of come down, there's usually turbulence and pain. So there will be some volatility in the stock market. And I could maybe keep my short position on into next year and wait for a down month, because there will be a down month. But do we go to 420 or 430 on the QQQ before we go down to 370 again? I don't know, right? None of us know. Anyone who has a crystal ball, I mean, there's no one. Warren Buffett, Charlie Munger, they said it best, that literally they've never met anyone who's good at forecasting where future prices will go. There's literally no one who has any idea. Anyone says that they know, they're lying or guessing. So with any degree of certainty, we have no idea what the future holds. And that's one thing for sure. I think I really like real estate because, one, it's hard to sell. Like, it takes a long time to sell, so you can't panic sell. Your emotions can't get involved. And when trading, it's really easy for your emotions to get bottled up and then release, right? You get like an event like we had today. And it's like I took everything in me not to close my short. That was probably the wrong decision, to be honest. I probably should have cut earlier and had a stop loss in place. But I continue to hold because I'm like, maybe it's going to reverse. Maybe tomorrow morning we get a catalyst. And it's like, that's the gambler in me, that's the trader that wants to win more than they want to be smart. And so my predisposition doesn't do well with the trading. I'm going to stick to real estate, stick to the lending. It's like, if I cashed everything out right now, why am I pushing? My wife said that to me the other day. She's like, why are you even trading? Like, what's the upside? Is it fun for you? And I'm like, well, not really. No, my heart gets running. And if anything, it's stressful. I hate having to wake up in the morning and check things and, and watch the price action. And I don't really enjoy it. She's like, why are you doing it? And I'm like, well, because I lost $1 million. I want to make it back. She's like, is it the best way? And I even say this to myself, is this the best way to make the money back? The answer is no. I actually have no alpha, no edge in the market. In real estate, I do. And so it's like, that's the place I should be parking my money, because the probability of loss is near zero. Where can you get a risk-adjusted near zero, such a great return with near zero risk? You can't. In the stock market, you make an investment. You buy the Nasdaq right now at all-time highs. We're damn near all-time highs on the Nasdaq 100. I mean, there's a lot of downside risk there. And how much more upside is there? 5%? 10% maybe? Does 5 or 10% actually mean anything for me at all? Like, no. The amount of stress I went through in the last couple of days, especially today, watching the market rally like 1.44% at peak today during the Fed was speaking. That stress was not worth any amount of money. And it's like, why do I do this to myself? And so anyway, I'm saying the same thing. I'm a broken record in that respect, because I continue to say the same thing and do the opposite when it comes to my stock trading account. And so in that way, I think I might be a stock trading gambler. And I might have those tendencies where I just need to not be able to have that price action in front of me. And real estate and lending, I don't have price action in front of me. I commit to a term for a year. Someone pays me 12% interest. I can evaluate the deal. I can lend on 70% loan to value. I protect myself so that I can't lose any money, and then I let it ride. And in real estate, even if you buy a deal that's at market and some things happen and whatever, and get to this deal, in 5 years you always win, because time heals all wounds. Inflation carries real estate prices way higher. You have leverage that helps you. And if you buy right, you have cash flow. So you just hold and you make like a 10, 20% yield on your cash flow. So if you're buying cash flow in businesses, the problem with real estate is it's a business. So you've got to run it. You got to put the time and the effort in. Whereas I think the lure for stock trading for me is like, I just do some things on my phone. It's funner, it's easier than physically going to a property. But then I think about it, I'm like, is it actually funner? Do I actually enjoy it more? And the answer is no. So I don't know, pretty depressed about that realization today. I added up all of the losses and I looked across everything. Crypto's up though. That's good. My crypto portfolio's up. Real estate's down, which is shitty. I've probably lost $1 million in real estate too. Just in the, if you look at the frothy top valuations of my portfolio in real estate to now, I mean, Ontario's down like 25%. So a quarter of the value of the property is gone. So if you owned a property, 50% loan to value, you had a 50% mortgage, 50% was bought in cash, 50-50 would mean that if a 25% drop happened, half of your equity was gone. So if you had 5 million in equity in your real estate portfolio, it's now, half that. So that's the reality for real estate, and it's going through one of its biggest recessions we've seen in over a decade. In Canada, it's a 2008 level collapse right now, and there's almost zero demand, and tons of growing supply. So it's an interesting time because I went and shorted the market, and like my thesis was maybe correct, but my execution was wrong. Like I shouldn't have shorted tech. What I should have done is short the Russell 2000, or the Dow. If I had shorted the Russell 2000 up until a month or two ago, it actually was almost flat on the year. So by selling options contracts and collecting theta decay, I would have been up 20 or 30% in a flat market, collecting the decay there if I just shorted the Russell 2000, all the index of 2,000 smaller companies, right? They're all suffering because the Magnificent Seven are being pumped full of money and doing great, and their valuations are through the roof. Almost, some might say, bubble-like in their multiples that they're trading for. Like, imagine buying a company at 200 times earnings. Like, you have to collect earnings for 200 years just to break even. That means no competitors have to come in 200 years. Nothing has to change. It has to continue to get better, paying for a lot of growth, right? So that's the current market right now. And so in real estate, we often pay 5 to 10 years of cash flow. And so that's a more reasonable valuation, those companies. So I don't know. It's even my dividend portfolio. I have a dividend portfolio where I invested like Enbridge and the bank stocks and stuff. And the big 5 Canadian bank stocks are down like 17%. And with a bit of leverage, most people in the dividend portfolios are down 20, 30%, So even my dividend portfolio got licked this year, like destroyed. Tech just outperformed like insanely well. If I had put my entire portfolio in the Nasdaq 2-to-1 levered, I'd have a $14 million stock portfolio right now. I ran the numbers of like just doing the inverse of what I did. I was like, shit, that's shitty that I, was wrong, and that the opportunity cost of that money for the rest of my life is probably $1 billion. Like if you just took the opportunity cost of that, $1 billion, it's crazy. But there's a learning lesson here, right? Magnificent Seven, government of America. I mean, really, it's kind of, it almost feels a bit manipulated, lately, especially with the pump we've been seeing going into an election year. I mean, that is what's happening in some respects. The government spending is out of control, and I don't know who's going to pay the bill, but hopefully it's not me, not the taxpayer. It will be the taxpayer, by the way. It will be you that pays it. They'll be long dead. Joe Biden will be dead in 5 years, so maybe he'll last 8 years. It won't be his problem, right? And his kids will be dead. His son will be either in jail or dead in 10, 20 years too, so 30 years maybe. So let's kick the can down the road and make it a problem for the next generation. Welcome to politics. How would you invest $2 million into real estate, David says? So my favorite way in this market, because rates are so high right now, you gotta look for seller financed deals. Go out there and find seller finance deals where you can either assume an existing mortgage or the seller provides you financing. So an assumption of a mortgage or a seller finance deal. You can get a lot of assumed mortgages at 3% right now, 4%. It's a lot of the deals are at market pricing. So if you want to find a deal on the purchase price you're buying it at, you may pay 5% or something. But there's a lot of seller finance deals right now. There's no one buying right now. So you have your pick. You can just take your time. You can throw out offers. You can lowball. You can negotiate. There is no one else in the wings. So you don't have to worry. You can take your time, work through it. But if I had $2 million, I could probably, on average, some deals I put 30% down, some deals I put 10% down. We're working on a deal down here in Florida where we're putting like 7% down or something. So that's on a motel on the ocean. So there's definitely opportunities to do that. Lots of it. But that's what I would do with $2 million. So $2 million, let's say on average gets you 20% down. That would get you $10 million in real estate you control, right? So $2 million controls $10 million in real estate at these valuations where it is right now. And when rates do eventually fall, we get to another bull market and inflation runs wild, because it will, $10 million on that portfolio, hopefully you're cash flowing a couple $100,000 a year. You get a couple $100,000 a year at least out of that $2 million, which is fantastic, right? You're making enough to pay down your debts, but the real money comes in the bull market when you've improved the property a little bit and the things are frothy, you can get a bidding war going, you sell that property. And someone comes in with a lower rate mortgage, they refinance, they take the property, it's theirs, you sell it to them. That's when the valuations of that $10 million real estate portfolio probably eke up to about 13 or 14 million. And so your 2 million has become, 6 million at a 14 million valuation. Your 10 million in assets, you put 2 million down to control that portfolio. 2-3 years from now, we get probably 10% appreciation. With inflation's really running at, like, they say core is like close to 4% right now. Headline inflation is 1.1%, but there's some catching up to do because real estate went down as inflation went up. Build costs went crazy, labor's going crazy. As far as like your input costs for real estate, the input costs are going up and real estate's going down. So there's a disconnect there. Rents are skyrocketing right now at the highest rate they've climbed in years. So we have rents jacking way up. We have labor cost to build. We have cost of building construction materials rising, and the cost of financing to build is mounting. So your inputs to real estate are rising, but the price is falling. So margins are just horrible right now. That will inverse. Real estate will catch up. It's laggy. So when the market is fully recovered, real estate comes after. In 2008, when everything crashed in the US, by 2011, we'd hit the absolute bottom. So I think probably 2024 winter is probably gonna be the bottom, but it's gonna be a slow burn. Like, you can start buying now and negotiating really good deals now that are just as good as you're gonna get next year. We're talking 2, 3, 4, 5% difference in price, and not a huge, big deal. But yeah, I mean, that appreciation we're gonna have a huge catch up just because of inflation. Forget the fact that rates coming back down to 3% actually just sends valuations to the moon, right? Because all of a sudden the cash flow is way stronger on all these properties. When the mortgage is 7 or 8%, these properties don't cash flow as well. But as it falls to 3%, everyone refinances their properties, everyone starts buying again, there's euphoria in the market, cash flow is strong. And yeah, so if you have $2 million to answer your question, you go control $10 million in property by putting an average of 20% down across the deals, get them seller financed. I like bigger deals because it's easier to spend that $2 million. It takes forever to do it with small deals, but with bigger deals, you can definitely spend that capital in a time-efficient way and create a portfolio that's designed to do really well in the next bull run, and that's where you can make really good money. Totally. BTC running hard, Bitcoin running hard. Is it really? Interesting. I haven't been checking today, but I saw the run that it was on last week. It touched over 60,000 Canadian. It was crazy. We're well into the 40,000s USD per token, which is great. I still have some Bitcoin holdings, so that's good. I'm happy for that. But yeah, still licking my wounds with the stock portfolio. Do you ever plan on starting a storage unit company? I've looked at it a little bit. There is good margins in storage, and I like that you're in full control. If they just leave, you take all their stuff. If they don't pay their bill, you take their stuff. And it's a pretty quick process too. Like, they don't have the housing rights that they have if you're renting them space to live. So storage, I really do like storage, for sure. Port City says, sorry about your position. Hey, no problem. Hey, Mike, any prediction for what interest rates will be at the 30-year fix by the end of 2024 in the US? So, well, Jerome said today he thought 0.75%. I think, and some of the bullest scenarios I've seen are a 2 to 3% drop. So we could see 4 and 5% rates for the 30-year fixed by the end of next year in a rosy case scenario. It might be closer to like high 5s and 6s, I think, more likely, but definitely falling from where they are now, for sure. Dominic says, how's it going, Mike? Questions. Have you ever hired a maid before when you were working a lot and saving up to? Yeah, we've definitely had nanny help and cleaners and things like that to help with. I have 3 kids, so definitely. It's definitely been something that I've dealt with a lot. The market is a clown market. I'm back buying JPEGs. Oh God, don't get into the NFT market. I did that too, and it slaughtered me. I think I put like $15,000 into the NFT market, and I lost almost everything. Buying a bunch of random. I have like a JPEG of like a pirate, like a Sinbad, and like a mermaid, and some random shit. So don't. Yeah, NFTs have no intrinsic value. I like real estate. I really do. I think it's one of the best. If you're gonna find an asset class to buy something that can produce cash flow. So if you're gonna find a business that's gonna produce cash flow, I think dividend stocks would be a great buy right now. Stuff like Enbridge, Scotiabank, Bank of Montreal, those stocks are down in some cases from their highs 20%, and they produce a nice 7 or 8% dividend. As rates fall, dividend stocks are very attractive because right now they're not. You can get 7%, in the lending market, which is falling. Bond yields are falling hard right now. But yeah, I would say that that could be a good play too. Diversity. Remember, don't put all your eggs in one basket, and follow what I learned from my mistakes. I put like millions of dollars into shorts. That was so stupid, so stupid. I've been so good, and I'm good at giving the advice. I'm not so great at taking it sometimes. Your own advice. Sometimes we think we're smarter than the market, and that confidence or arrogance results in mistakes, and mistakes can be costly. You got to try to learn from that. You can be right on premise, but wrong on timing. Totally true. And being wrong on timing is as good as being wrong. Hey, Mike, hope you're well. How would you get your second property cash out refinance versus home equity line of credit? So, that's one way, definitely. You could just work and save a down payment as well. You could negotiate some seller financers or something like that. You could, lots of options really, for things you could do to finance that property. But yeah, if you had equity, I guess I'm assuming that you have equity, given you've said cash out refinance or HELOC. Sounds like you're wanting a specific answer. And I like the cash out refinance better because the rates are cheaper than a HELOC. Either can be a good option depending on your strategy and your reasons for doing what. If you don't plan to repay it back for a while, then it can make a lot of sense. It can make a lot of sense to lock it in, right, at a lower rate. But if you plan to refinance the next one and you want to pay that back, then a HELOC gives you that flexibility. So if it's your primary residence, I would say do the HELOC for sure, because then you can Smith maneuver it and get a tax deduction against your personal house for an investment property. So that's another tidbit, I guess. Dominic says, what decision do you think is best, to rent out a trailer home or just start off with a house? There's not necessarily one that's better than the other, but run your numbers. If it can create positive cash flow, then it could be an interesting opportunity. I think trailer homes, the challenge with those is they don't hold their value as well. They depreciate faster than a home where you own the land. So think that through in your decision. Index and chill. Yeah, it's just not for me at all, to be honest. I'm just going to stick to real estate. I was looking for an off-ramp, to be honest with you. The last couple of weeks, I've been looking for a really good down week. We had 11 weeks straight up. Usually there's 3, 4, 5 weeks of run and then a down week that corrects and it keeps going, right? But I think things are overvalued. I couldn't imagine buying the index right now. I think it's so overvalued. It's just, there's going to be so much risk attached to buying. If I owned any long Nasdaq or S&P 500 position, I would liquidate it right now because I think it's way overvalued. If I had to hold a position and I had to build a portfolio, I would hedge the shit out of it just to make sure that if there is downside protection, I have puts there or at least sold calls on it to protect against that downside risk. Jobs for healthcare, government, and returning UAW workers and entertainment workers. So true. Very, very true. Again, almost all government related, right? Government intervention, I suppose, into rising job opportunities there. And the government is spending. The deficit is huge. It's growing at the fastest rate ever. Again, just trying to carry the cost of financing. They need to bring rates back down. And so they will bring rates back down. And the only way they can do that is by making inflation look low. So I'm sure they'll pump, the reserves of oil to drop the cost of shipping and to bring oil is a large contributor in the cost of everything. So I'm sure they'll work on that. I thought a real risk was into 2024. I thought we'd see some disinflation or at least, maybe deflation even. I thought they went too far. And so that was my thought, was we get some deflation, but I don't know. I thought deflation was a scenario that could happen. I thought a resurgence of inflation if they drop rates too soon, but they've been holding rates. They haven't dropped anything yet. So that's the right call, I think, is to keep rates higher and make people suffer. It should bring inflation down. But I'm surprised the economy is so strong. It's kind of bullshit. Every small business I talk to, every person I talk to is suffering. So when they say everything's fine, they mean the big, large companies are fine, but most people are not fine. And so I don't know how, everything's fine You know, it's like everyone's got picking up 2 and 3 jobs. So the jobs number looks maybe better. I don't know. Como says, the only way to beat the market is to use monthly chart like the banks do and throw a 200-day moving average on it. You'll be buying for 6 months to 2 years before results. I think the only way to beat the market is in the long direction. It's very, very difficult in the long term, in the short direction. So I think I had the wrong direction in general, but it's great when it happens. When you think you're smart in the market, you know, it feels good to win against the market. $2 million could get you $100 million in real estate. What? That's crazy. I don't know about that. That would be requiring 2% down. And then your closing costs alone would be 1 or 2%. That can't be right. Those would be some amazing deals. I can't imagine they'd be at good valuations. I'm sure you'd be paying top dollar if the sellers or you're finding some financing at 98% loan to value. Tegra says, why not just long the S&P 500? Again, I mentioned that already. For me, it just doesn't move the needle, and I think it's overvalued. So I can get a better return just lending. You know, doing lending in real estate, I can make double-digit returns compounded every year, risk-adjusted, better than the S&P 500. So for me, it's just I have better things to invest in. Again, which begs the question, like all my friends are like, dude, why, given with what you know and who you are and how connected you are into the real estate market, why do you try? Like you literally can make a 12% risk-free return, guaranteed. Why would you ever try and beat that? He's like, Warren Buffett can't beat that, you know, over like in his more recent years. It's difficult to outperform the S&P 500. And it's like, yeah, they're right. I mean, everyone who's given me outside consultation has been like, Mike, what the fuck are you doing with a trading account? Like, it makes no logical sense. I can't even make a good reason for it. I just, for some reason, believe in my mind that I can beat the market for a short period of time. Like I can have a really good month and then just quit. And it just hasn't happened. I've just continued to lose every month, which again is unlikely. It's like, okay, it's kind of like gambling. As you flip a coin, right? You flip a coin and it's 50-50 chance. Each time you flip the coin is an independent trial. In the stock market, each day or each movement of price is not an independent trial, meaning previous, you know, price action actually does predict future. If you have the market run up 10 days in a row, straight up, there is a higher probability it will move down the next day. Unlike when you flip a coin, each time it's an independent trial. It's 50-50 probability. My probability of being right that it's going to go down tomorrow increases with each every day that it goes up. So when we have 45 days fucking straight up, 17% rip on the index without any correction at all, a correction is due. We're overbought right now. But I mean, there's a lot of market factors that are happening right now that we could continue to be overbought for another 10, 20%. It's hard to call where that's going to be. But I've been wrong a lot this year. So what the fuck do I know? But I believed that maybe it's some cost fallacy, maybe it's, you know, I'm due for a winning week after losing so many weeks. That's why I haven't capitulated yet. And I probably should have. I should have a stop loss. And I actually did have a stop loss and I re-engaged the short again. I sat for a couple of weeks. You guys remember on the show I said I was done shorting and I did. I stopped shorting for a couple of weeks. Then I got right back to it, which is the mistake. And I shouldn't do that. I should bar myself from thinking that I'm smarter than the market. What's your take on AI and who will benefit the most? Like in general, in the long term, I think that AI is overhyped right now in the short term. I think that it's going to take a lot of cash dumping in for a long period of time before we see the efficiencies that are going to come out of AI leading to real terms, real dollars. So a lot of people speculating on the value of AI with like NVIDIA up 1,000%. I think it's a little bit frothy and a little bit too much. But I will say that in terms of like human life quality, AI is actually a really great thing. You know, it's, you know, AI could actually make our lives better in so many ways. An interesting, I guess, thought with AI is like, it may actually lead those with private capital, like Elon Musk's of the world and the Bezos, to actually be able to control the human race. Like, could you imagine with AI a future where, could you imagine with AI a future where Elon Musk had 1 million drones that could kill one human a second? So 1 million drones, he could wipe out a city like that. Done. 1, 2, 3, done. Boom. The whole city's tased. Imagine how we become flesh bags. Like humans become not useful with really good AI. Most humans, 90% of humans, become, you know, useless, of no value. And so it's an interesting sort of dystopian reality that can't exist. And it makes me want to drive for more capital, because those with capital are going to have everything. And those without capital, labor becomes less and less valuable when, I guess, general labor. Like, soon there's going to be no one working at McDonald's, no one pumping gas, no one driving a taxi, no one doing any of the driving a truck. It's only self-driving, AI automated. And so we've got to retool the human race so that labor is useful, or we have some sort of utopia where government seizes AI and uses that technology to make sure we have a better life. Like, there could be a universal basic income for all humans. So I don't know. My thoughts on it are, like, accumulate as much capital as you can, because capital is going to control the world. Capital is becoming more and more valuable than labor. It used to be like the collective labor was more powerful than the capital. And it's becoming the opposite, where those with capital have way more control and influence and better lives than those with the labor. So that's just a reality with AI. And AI is, we're in the next technological revolution right now. Do you use your stock losses to offset your taxable income? Can't they carry forward? Yes, totally true. Yeah, I got a huge 7-figure tax offset. Yay. Probably get audited by the government. They're like, we don't believe you actually suck this bad at investing. And it's like, I actually do. Take a look. Here's my trade reports. But yes, I have a huge loss that I can carry forward. So yeah, I mean, want to look on the positive side, I can go make 7 figures tax-free right now. So my comeback is going to be easy. And then I have all the experience, all the knowledge that I made that wealth in the first place. So making it back is super easy. I didn't lose everything. Like, it's a percentage of my net worth, like whatever. It sets me back a year. Darn, I worked my ass off for nothing for a year, doing a bunch of property deals. It sucks. It's depressing as fuck, actually, when I put it that way. It's like I just lost a year and a half of my life for nothing. Fuck trading. New rules will allow offers on home purchases to be made public. Thoughts on the effect on the market? We're talking about in Ontario. It's the seller's choice to disclose if the offers are made available for others to see. So what seller would want to disclose what the other offers are? They'll all just say no. It's not forced. So the seller can just say, I don't want to disclose the other offers are. Blind auction. Away you go. And that's what happens. So why would any seller want to tell you what the other offer is? They want you to pay more, so they're going to obviously keep it blind and keep it sheltered. So that was my understanding of the rules, is like it pretty much changes nothing. Elon has recently addressed the depopulation agenda with Alex Jones, Tucker Carlson, and the Tates on Twitter Space. I haven't followed that at all, to be honest, so I can't comment. You mentioned BMO and Scotia stock. Of two of which one do you prefer? I have a little bit of both. So, I mean, I like BMO a little more. I think they're more of an underdog, but I like Scotia too. I like their presence in, I like BMO's presence in the US. I like that exposure they have. I like Scotia's presence in the Caribbean. So, I mean, having a little bit of both is good. Boom, boom. Oh, I got through all the questions. That's it then, I guess. We'll just end the stream early tonight, guys. If you have any burning questions, now's your chance to chime in before I do the end slogan. And that's it. Secret to unlocking wealth, your you is 3 levers and control your financial future. You got to spend less, earn more, and maximize returns in the difference. That's it, guys. That's the secret to building wealth. If only you could master all 3 of those, you can have financial independence. You can live the life that you want. So I want that for everyone. And thank you everyone for watching tonight. And for those who are shorting the Nasdaq, portion or position size, make sure you have a stop loss. Make sure you position size. I personally think that we may keep rallying into the new year, but in February or March, we are going to have a pullback month, is my forecast. Again, I have no fucking idea. No one has any idea, but we are well overdue, given that we are pushing into new all-time highs. All we need is one negative catalyst report. So war, escalation, oil prices jump a little bit. How about the fact that maybe Jerome drops a bomb and doesn't drop rates right away? Maybe think about the possibility of what else could happen that would be a negative catalyst? A bad GDP report. If the economy is not strong, the Fed is not going to land in between the rock and the hard place like they think they are, right? You know, there's so many possibly negative catalysts, and we've had so many good catalysts in a row that it's time for a bit of a pullback. But again, market could keep running. We could set a new record for the hottest streak ever. And we're getting damn close to that. Like, I mean, 340 on the QQQ to now well into the 400s. I mean, that's a well over 15% rally with no correction. Brutal run for the shorts. So hang in there, guys. We're going into election year, so it might just keep pumping. You never know. So right now at the markets, are turnkey multis good or fixer upper? So it really just depends. You can sometimes find really good turnkey deals. Sometimes you find stuff that, needs a lot of work and it's a great deal as well. I always like to find something with some value add in some way. Okay. Looks like I'm through all the questions here. I don't prepare for end of times. I mean, I have a little, grab bag if I had to go, and I do have a little plan in place, but I think it's a very low chance of that coming to fruition. But anyway, guys, thank you so much for watching. We'll see you guys next week. As always, live 7 to 8 p.m. Eastern Standard Time. You can find me at rosehartcapital@gmail.com. You can also find me on Instagram and Facebook at Mike Rosehart with a blue check mark beside it. And look forward to connecting with you guys in the future, and we'll see you guys, of course, every Wednesday. Have a good Wednesday night, guys.